Welcome back, everyone. This video is one of the most highly requested, and I am going to go over my screening filters on unusual whales that help me not only identify winning trades, but also help me avoid traps and losing trades. We're going to talk about dividend dates, earnings, which includes day trading on earnings as well as swinging earnings, and indexes. Before we get started, to those of you who are new to the channel, just a bit of an introduction because I feel that it's very important these days. Who am I? My name is Peter Tarr. It's Profits Taken on Twitter. What are my credentials? I have a history in the markets. In 2005, all the way back, I became a professional licensed trader as well as an options and derivatives specialist. I was licensed for both. And today I provide free content on Twitter at Profits Taken. You can see my track record. I'm very transparent. I call things out in advance. I only choose one direction, so you won't see multiple strike prices or multiple guesses saying, well, calls but puts if it doesn't go my way. It's clear. You can reference my track record, and I'd just like to be forthcoming before I continue on speaking about something as important as finance, because I think that's very important. Without further ado, let's get into it. I will do my best to not only be concise, as I am with most of my videos, but also thorough at the same time. And of course, you can always feel free to ask questions here in the comment section or on Twitter, whatever is more convenient for you. So you see a lot of data in front of you right now, and I'm going to scroll down, and where I want to draw your attention, don't worry too much about the security that we're looking at. That's MA, that's MasterCard. I'm going to go down to the emojis selection. And emojis are really, I think maybe it could have a different screening name, a different name because it is screening. And you see a lot of different options here. So people will tell you to turn on or turn off different things, and I'd be very careful about who you listen to in that because most people don't necessarily have the right advice. But there's a few things that I turn off, and one of them that I turn off are dividends. I don't have that on my main view when I'm looking at securities to choose from. Why is that? Why do I not want to see dividends? Well, this is going to be an example, and I want you to understand it. So how would you feel if you saw this? And a lot of people do, and it comes up quite a bit. If you saw this flow that we're looking at right in front of us, what would you think? Well, first thing you'd look at is we have near-term expiry dates, right? Okay, these are deep in the money, but there's quite a heavy flow. I mean, look at this. So do we have a heavy flow? Absolutely. Is it a clear direction? Is it bullish versus bearish? Well, obviously, there's a very clear bullish direction. How about the premiums? If you don't know a lot about premiums, I have discussed that in another video where I do a deeper dive. I highly recommend digging in because premiums can throw you off. It's hard to know what's significant and what isn't. Please take a look at that video. I will link it at the top. But we have everything checked here. We have a security. We're buying a lot of calls. We have near-term expiry, so there's exposure there. Extremely strong bullish flow. It seems to be all in one direction here. So that signals there's an opportunity to buy, right? Because as I say, I think I coined this for unusual whales, somebody always knows. Someone always knows. So there are insiders making moves who always have an inclination as to what's going to happen. But is that the case here? And the answer is in the chart that I'm going to show you, and we'll discuss it a little bit more. Here's MasterCard. Here's the date, the 5th, as you saw in the last screen, in which everyone is buying those options. This is when we see that options flow. You see where MasterCard is at 382. Takes a little bit of a tumble. We see a lot of purchasing here. Make sure to note the times. On the times we were looking at in the options flow, you'll see a lot of them, we couldn't even scroll past it because there was so much activity, and that constitutes unusual activity because we don't usually see nearly as much activity as we did for MasterCard when we were looking at the options flow. So you're thinking unusual activity, heavy premiums, it's all to the buy side, to the bullish side. I'm going to pick up calls. Well, here's what happens. You pick up calls, here's what happens the next day. And here's what happens the day after, right? So maybe you get in at 375, your calls open at 368, you're in panic mode, you're selling, you're having problems. The IV is probably going to work against you. So even if you climbed back up here, you still wouldn't be able to get your money back. Maybe hold on, and you are in for an absolute world of hurt and devastation. You shouldn't be tolerating a drop like this, but it's after hours and you can't close your options position. So you get stuck. But what happened? There's a dividend. See the dividend? I filtered that out. So you get a bit of a better idea as to why I filtered that out in unusual whales. So let me jump back to unusual whales in just a moment here, but you see what happens. There's a lot of major institutions, major players who are getting involved because the money that we're seeing spent is of that nature. So I'll jump back right now. And here we are. You see that a lot of money was spent. These are big premiums. You see $1.5 million, 1.3, 1.5, $1.3 million, right? And they're hitting the ask side as well. Again, that's not overly significant. I've heard people spread little myths saying it has to be the ask side because that shows urgency. Knock it off. That's not true at all. Those are people who don't have any professional experience. It's simply not true. But when we look at this, we had everything that we needed to suggest that institutions were involved. There was a clear direction. There were high premiums. Why did MasterCard take a dive? Well, this is hedging. This is a great example of hedging. Institutions and major players were hedging. And this is extremely common to see a setup like this without delving too far, because I want you to simply focus in on what you can screen out. This is something that you'd want to screen out. And you'll see this over and over again. And not only is it deceptive and something that can throw you off or give you a false impression, as we saw in the chart, had you taken this trade, had you jumped in and said, oh my goodness, look at all of these calls, this is one of the strongest bullish flows I've ever seen, I am getting in, you picked up one or two contracts, you would have lost a tremendous amount. You know, if you were near the money, you probably lost 60, 70% plus on your options, and that puts you in a world of hurt. This is extremely common. It's not just MasterCard. You don't normally see activity like this on MasterCard, but even securities that are not traded with high volume or frequency will pick up quite a bit of volume when it comes to dividend dates. We see a lot of people making purchases as we get closer to dividend dates. And of course, we see holders of the security selling as they're taking profits. What else does this do that's problematic? Well, aside from throwing you off and making you get into plays that really aren't there, it clouds up your screen. There's just too much data. I mean, this is from MasterCard alone, right? And look, we've only covered a few minutes. So I'm on Central Standard Time. So what you see here is 14:55. That's 5 minutes before the close of the market, right? Look how far we have to go just to get a couple minutes back, right? So when you have all of the different dividends on the market showing up and entering your flow, it really obfuscates your view. You waste a lot of time. You're looking at a lot of activity that isn't overly relevant. Of course, you can see the symbol here. So I turn that off. Now, for the same purposes and to help those who are considering swinging, be extremely cautious. So I'm just going to go ahead and turn that off here. And I'll show you one more thing before I discuss the swing traders and some of the other elements. Notice how once I turn it off, even if I type in MasterCard, nothing shows. That's because the filter will override your manual ticker input. And that's a very good thing. Let me tell you why. Because you may just have a watch list that you're looking at. It might be your go-to watch list or something that you've accumulated for different reasons, but you're not conscious of the fact that the dividend is near. Now, yes, you do see that symbol, but you can overlook it. It doesn't even pull it up. So I've had times where it slipped my mind, or I've just been working quickly and I type something in and then I see we're blank and it clicks and I think, that's right, dividends this week. So just, it's a fail-safe, it's redundancy, if you will, that prevents you from falling into these traps. Now, earnings this week are the same principles. So when you're swinging earnings, know that whatever you're getting into, we're going to see a lot. I'm just going to turn this off. So if anybody is trying to get a feel for what we see in the data, know that when you're swinging earnings, you're going to see the same thing. I will have a video coming up on earnings, but you see a lot of players hedging. And what it does is it obfuscates the data. I use that word sometimes. How do we say that differently? It clouds the data because you have all kinds of unusual activity, but there's a catalyst for it, right? And so when we're trying to read what major institutions and players are doing where they're in the know on a move, if we can't define the catalyst, that might suggest a little bit more to us. It might suggest an organic move. But if you know that earnings are coming out, these are hedge opportunities. If you know that dividends are near, these are hedge opportunities. And as I said, I like to be very quick and concise, so I won't belabor this video, but what are the other things that I turn off? I turn off indexes and exchange traded funds. Why? Same exact reason. You're going to have rows upon rows upon rows of data that just cloud and obfuscate your view. If I'm looking to trade indexes specifically, I will look at them only and nothing else. I like to narrow in because there's quite a bit of activity. I also find that indexes are much more difficult to play based on options flow because there's just so much data to compile. It's much easier to narrow in. And I know it's attractive to do so because indexes are, one, somewhat volatile, two, extremely liquid. So you can often get into an options play where there's maybe a 1 cent spread, so you can just get in and out and you can scalp. But in terms of just researching, to have insight into the entire market, the best of the best don't have nearly as much clarity, right? That is also because if, let's say that you're an insider, well, you're not an insider on the S&P 500 or on the NASDAQ. You're an insider on a specific security. Does that make sense? You work for a company and or know somebody who works for a company. And you're probably not trading if you work for the company because that's called insider trading and it's illegal. But I'm sure a lot of information gets spread out. So those are the three that I narrow, and I wanted to qualify my opinion, my take on why you should do that. Now, if you want to research these, do them individually, right? Because you just don't want MasterCard taking over your entire page. If you wanted to research this and make a trade based on what you see, knowing that the dividends are knowing that the dividends are present, they're certainly not present, then what I would suggest doing is just narrowing in on them individually. It's the same thing for the index funds, ETFs, and earnings this week. So that's what I turn off. Again, dividends, earnings this week, ETF, indexes. Turn those off. There's far less noise. So then when you're looking at the flow, you'll see a world of difference. And last thing is that most of these not only have an endless number of entries, but the premiums are disproportionately high versus what they normally are. So relative to your typical premiums, they're going to be very high. So that's also attention grabbing. And if you have a minimum premium range with no maximum, these will absolutely dominate your page. Okay, so I hope that was helpful. If you are considering using unusual whales, please see the description and you can use my coupon code. You'll get 5% off. I appreciate it. Any questions or comments, leave them below. Make sure to subscribe and turn on notifications. It's the only way that YouTube will let you know what's going on these days. Otherwise, you'll miss a lot of great new videos. And do follow me at PROFITSTAKEN on Twitter. Thanks, guys. We'll see you again soon.